Bring on board Deven Choksey, Managing Director of KR Choksey Securities. Deven, morning. Thank you for joining us. Deven, the price action or the character of price action for Indian markets in the last 2 or 3 days has changed. Is this a sign of consolidation, or this is signal of a market which is now running out of breath?
Good morning, Nikunj. Well, I think the way in which we look at this particular market is that there are two important events ahead in next 10 days. The first one would be certainly the UP election outcome, and the second one would be the budget. And I think along with budget, you are also going to see the monetary policy coming out. So if you are looking at, I think, all these events put together, and if you want to see that kind of an outcome which everybody is expecting out of the budget, particularly in the repairing of the fiscal mess that this country has, if you want to see that particular kind of an outcome as a positive outcome, then certainly I think market will probably, I think, remain a little bit more optimistic than otherwise. But having said that, I think one would like to see whether the government is taking a full hog action at this point of time in clearing the fiscal deficit problems of the country and repair this entire situation for, and at least show the path for at least, I think, fiscal deficit repair situation. In that kind of a situation, market would remain a little bit more, I think, hopeful. It will remain a little bit more optimistic for the outcome. To my mind, I think we will trade between 5200 and 5600 before the budget, and any positive outcome after the budget, I think, could probably break above 5600 and go into new orbit. But till that point of time, I think we should be trading in the range of 5200, 5600.
Deven, a very basic plank of this year's market rally is this big assumption that in coming quarters, Reserve Bank of India will cut interest rates, and it is time to revisit rate-sensitive stocks. Now that crude prices are at a 10-month high, do you think it is time now to exercise caution and maybe log out of rate-sensitive trades?
Well, Nikunj, there are two aspects of it. One is, I think, the crude oil-driven commodity prices, and second is, I think, the food commodity prices. Whereas I do agree that the government is now much more in comfortable position as far as, I think, food-driven commodity prices, and they are unlikely to move up sharply as they were at one point of time last year. However, I think the confidence wouldn't come as much because of the rising crude oil prices. Now the question is whether the crude oil prices would rally very far and probably go up to 150 as some of the analysts expecting in the global market, or whether the crude oil prices stay muted between 110 to 125 dollars. So if that is the case, then in such situation, I think the Reserve Bank would probably go a little bit careful, little bit slow in reducing the rate of interest. My own take is that any case, I think they are not going to be in hurry to reduce, I think, like rate of interest in very successive quarters. They may probably, I think, take a time of between 4 to 8 quarters depending on the situation and bring down the rate of interest. But certainly would say that the rate of interest have peaked out. I think how fast they will come down would be dependent on how best, I think, we see the inflation coming under control due to the crude oil driven commodity prices.
Deven, the ONGC FPO issue has been a comedy of errors. We can blame it on the government, we can blame it on exchanges, but what, to your mind, is the key takeaway of ONGC FPO debacle? Now that LIC has pumped in another additional 12,000 crore, do you think they will be restricted and the open market stock purchases will now come down?
Yes, I think one of that could be the interpretation, Nikunj, for sure, that I think LIC's ability to buy from the secondary market would remain a little bit muted given the kind of money that they have been investing in the banks, in the ONGCs, etc. So to a certain extent, I think this particular assumption is correct. But I think referring to the first part of your question, I think what can be the inference which one would draw from this? I think it is very, very obvious and clear that if you want to bring serious investors into the company, then probably give them clarity about the company's future prospects. ONGC is one such company where you have a fundamental strength, I think, but at the same time, I think the subsidy non-clarity is putting off, I think, most of the investors. Look at the balance sheet of the company last year against, I think, the average realization of about $100 per barrel of crude oil. The company has ended up with around only $52 per barrel as a realization, which means I think the major part of the money has gone towards subsidy bill. Now, if this is going to be the situation for a company, then no serious investors can bring money. We have been talking to a lot of institutional investors, and they have been very clear that if government gives this clarity on the subsidy phase out, then serious money can certainly come, and this stock could probably get indeed re-rated. going forward. So according to me, I think this is one lesson which one needs to learn from this episode, that I think if you want to bring investors, do give them clarity and confidence. I think they will certainly bring money into the market. The company is not necessarily bad. There is no need to find fault with the exchanges, neither there should be a finding fault with the auction mechanism. According to me, I think the fundamental issue on subsidy, which the government owns, the responsibility to clear it out, I think is the main issue in the debacle of this company.
Deven, one last question before we let you go. What is your call on the entire sugar space, considering the Uttar Pradesh election outcome on Tuesday could be quite critical for some of these players?
Honestly, I think I'm not keeping, too much of weight on the outcome of Uttar Pradesh election and the sugar, etc. But generally, I believe that I think after this particular season gets over, the sugar should globally, I think, start showing some amount of uptrend. And that is where I think the price improvement should take place in the sugar sector as a whole. Now, which company would benefit, whether the south-based companies would benefit more vis-a-vis the north-based company in this kind of a situation, it would be, I think, a workout that one will have to carry out in respective companies based on their financial positions, etc. But thing is very clear looking that sugar prices are likely to assume steady to uptrend going forward before the next season starts for the sugarcane crushing.